Subsequent to the end of the quarter, however, Digital Risk did request a proposal to expand into the 11,600 square feet that we have remaining at the property to be coterminous with their current lease. Brookwood Milford, that's the one that we have a master lease on through 2015. We have now engaged, before we were working through the broker who was working with the tenant, we have now engaged our own broker on that property, Jones Lang, and we were also at this point looking at getting broker opinions of value to determine whether or not it's time to put that property on the market. Switch over to Brookwood Value Partners. Brookwood Value Partners, Brookwood Commerce Investors. As Tom mentioned, we closed on a refinancing of that property yesterday. The loan was in the amount of $25.4 million, and as a result of that financing, we are returning approximately $3 million to investors, half to investors in BVP, and about half to investors in Brookwood Commerce Investors. We continue to do some capital improvements at that property. In particular, we are doing significant upgrades to the lobby in the office building there, also at the hallways and first floor restrooms in that property. We expect those to be done by year end. We have signed a letter of intent for one tenant there to renew for 7 years. They will downsize by about 18,000 square feet, but we'll get 7 years more of term on that. In addition, we've signed a letter of intent with another tenant to take that 18,000 square feet plus an additional about 4,000 to 5,000 square feet. And we have another letter of intent with a office tenant to take about 10,000 to 11,000 square feet. So that occupancy is increasing there. And Brookwood Highlands Investors, one of the largest tenants at Brookwood Highlands Investors, have expanded by a little over 3,000 square feet, bringing that occupancy to over 93% in the building. And as I think we have told you in past calls, we are currently marketing that property for sale and have a call for offers due on December 10th. There were 79 confidentiality agreements executed for that sale, and we'll let you know, obviously, as soon as we get offers and sort through them. Brookwood RB Investors, this is the last property. Lobby renovations at the 55 building and landscape improvements at that property are complete, and we believe that with those improvements, we're successfully positioning that property to achieve higher rental rates. Rates for renewals and new tenants have increased from $1.65 in the first quarter of 2013 and are ahead of our underwriting rate of $1.55. The most recent renewal of an existing tenant was executed at a rate of $1.80 per square foot per month, as is. So that is a quick summary of all the properties.
It was a summary quick, Kurt, but it wasn't quick.
Okay.
But it was a good job. Okay.
There are a lot of properties.
That's what happens. We're going to have to revisit this when the portfolio grows, because they want to listen to us this long. Just for those of you who are in Brookwood Commerce Investors or BVP, the preliminary distribution numbers are as follows: approximately $28,000 per unit for those of you at Brookwood Commerce, and approximately $3,100 per unit for those of you in BVP. Given the holidays, we'll try to get it out beforehand, but realistically, we're going to get it out on Monday, okay? So we'll get it posted, ACH, those who get ACH or check, whatever the processes are, on Monday, so you should have your money either Monday in your account or Tuesday in terms of having a hard check delivered to you. As always, there'll be a letter that explains everything that Joyce and Kurt write, that will explain the distribution, all the tax stuff and that kind. If you have any follow-up questions, just please call Joyce directly. But approximately $28,000 for Brookwood Commerce Investors per unit, and approximately, that's per $100,000 unit, so I have the right metric, and approximately $3,100 per unit for investors at Brookwood Value Partners. I'm going to speak just for a quick second here and then turn it over to Tom. We've always had a lot of questions on the land, and we do a lot of work here, and so after the last call, we sat down and worked over the past quarter to come up with a talking point piece that had in one place what we look at and in terms of the metrics and why we're doing certain things, certain properties. A lot of you have called me. I've received some very, very good, intelligent questions, both by email and letter and phone calls, about our strategy. We've discussed it a lot here, but I wanted to put it in one place in as simple and as intuitive a format in terms of what we see and what we look at. What I wanted to say before I turn this over to Tom, who could explain this, is that we also have runs that we look at all the time internally on the entire fund. We do it for every investment with a myriad of different assumptions, combinations of assumptions in terms of what the returns look like, because that's what you care about. That's what we care about as well. And making assumptions on the commercial real estate as well as what we think is going to happen with the land. And Tom will talk more about that now because he's taken the lead, obviously, in all the discussions with the home builders. He was actually just down there last week as well, so we can update us on things from that point, too. But we basically have returns that range from the high single digits to the low to mid-teens on a net IRR basis for the fund, looking at a bunch of these scenarios. I opted not to put those out because, as you can imagine, with 1,360 lots, 1,360 total lots minus the ones we've sold, and all the different things that can happen with the commercial portfolio, it's basically a fool's errand to try to put a number out there and have to stick to it. I can only guarantee that it would be wrong. But so everybody has context here. With the land, in terms of what we think we're going to be doing, where we see the price right now, the discussions that Tom is having with Lennar and all the different home builders with which we're dealing, as well as what we see with the good commercial properties that are in here. We're looking at about a high single to a low to mid double-digit return, depending on a lot of things. Obviously, timing affects that as well. We could easily see ourselves selling a lot of the commercial properties in 2014 and having accelerated sales in the land as well. So I wanted to get a context. I'll be glad to answer any questions in this call or even afterwards on that. But we know through the comments you make to your individual brokers here at Brookwood and to me and to Tom directly, that's of course what we care about and what you're concerned about. And so we we basically put together a framework within which we could have that discussion intelligently, declaratively, and objectively, so everyone understood what we're going through in terms of decisions that we make. And so with that, let me turn it over to Tom, and he's going to, as he always does, talk about the land portfolio and then talk about the market for acquisitions right now, our pipeline, what we're seeing in the marketplace from that standpoint of the company. So, Tom?
Okay. Thanks, Tom. Let's start with the land component first. We continue to see strong activity in really all, or strong interest in all the communities that we have remaining in South Florida, and that's Bella Vita, River Club, Colusa Creek, and the Grove. And over the course of really the last 30 days, we've had the various builders that have been active in these communities come to us for additional lot takedowns. In Bella Vita, we're currently negotiating with Lennar to take another 25 50-foot front lots there, at an average price of around $40,000 per lot. This has been roughly a 35% increase over the last pricing that they took, roughly a year ago for 30 lots at that point. River Club, Miranda continues to be a very active builder in that community. We've recently negotiated an amendment to their purchase and sale agreement, allowing them to take 27 additional 50-foot lots. Again, this was involved a significant increase of roughly 40% over previous lot pricing. Miranda's come back to us in River Club and wants to build some larger models in that community. It just so happens that we've got some 60-foot front lots in River Club, so we're in discussions with them to take 10 60-foot front lots with an average pricing of around $51,000 a lot. So that will be the first of the 60-foot front lot that we've sold in River Club. Colusa Creek, we've got Miranda. We're in discussions with Miranda to acquire 20